and what we're gonna go through first. So we're here to talk about how the appeals process works. And part of this is not just to say, you're going to appeal your taxes, you're going to win, your taxes are gonna be reduced. If you signed up, you got an email that I said specifically in that. Come here to find out what the appeal process is, why it is, and that we are going to try to get your taxes lowered. They're not gonna lower substantially. I just wanna make sure up front that you know, you can stop me at any time. I was a teacher, so I tend to kind of talk fast sometimes, and I know that, and I try to slow myself down. Just do this to me, tell me to pump the brakes, and if I'm going a little too fast.
Walk this way. So it catches you.
Oh, he's videoing it for us here so that we can also give you clips so you don't forget what we went through today. It's going to be a lot of information and a lot of people don't understand it. How many of you came today with the idea that we have had our taxes increased and we didn't vote for this? How many people came here with this idea? Raise your hand. You're not wrong. I've heard, we got 300 people. We got emails from 300 people, y'all. So if you think you're the only one, just because you're the only one who's raising your hand and being brave, that is completely untrue. So yes, a lot of people think there's something that happened to cause this. And so the first thing I want you to know is what caused this is me and you. And Aaron, and John.
Sorry guys.
We're realtors. And what do you think our job is when we sell your home?
To get the best price.
To get the best price. So what has happened is, over the term in which they're doing this process for assessing your property value, during those years, we have been at an uncanny high in the market, as you well know. COVID brought forth some really weird numbers in real estate. So property values, you've heard people saying, I've only been in my house 6 months and I got 100,000 when I sold. And we're all like, wow, our property values went way up. Well, with that, who do you think is gonna take part of it? Uncle Sam. You know, he's coming after you, the state, it's really the state. So, we have to pay our property tax on those increased values. So we were all happy watching our values go up. This is our penalty. And so what happens is property tax assessments are done every 2 years. They're on the odd year. So we're in 2023, meaning it's
They
time
did an adjustment.
for the assessment. Say again?
They did an adjustment in between the 2 times.
Correct. We're gonna talk about that adjustment. And it's not between the two. What it is they took comparables, just like we do, when we're running comps for you. Have you ever sold a home? No. When you sell a home, a realtor will come in and we will say to you, here are some recent comparable home sales for you. And this is where we think we should price your home. We adjusted for this, that, and the other. What you're seeing when you do your online application for appeal as an adjustment is an adjustment for time. Okay? They adjusted for time. So you can contest that adjustment of time, I want you to know, because time is something that they're putting a number to. They're saying, and I spoke to them, they're saying between January 2021 and 6/30/2022, every community, every home sale, month over month, will have an adjusted price of 1.3 to 1.5% of the sales price, up to June 30th, 2022. So what date they're looking at for the actual appraisal, if they're looking at an actual appraised value for your home and a market value, if you will, they're looking at the month of June of 2022. So when you pull up the comps, and we're gonna show it to you here in a minute, but if you pull up the comps, you're gonna see they said that they're looking at comps from January 2021 to June of 2022. Why are they only taking comps from June of 2022? That's the number that they're sticking with, because that is the most recent to now, okay? That's the most recent month. So every month that's further away from that, they're adding monies to come up with that value. And I'm gonna do the math for you. So you're gonna see that, we are gonna talk about it. So if this is done every 2 years, what's gonna happen in 2025?
Same thing.
Predictions? This isn't me lecturing, this is interactive. When I teach, it's interactive, I promise.
They're
So,
gonna have to go down because COVID rates, COVID prices are never happening again. That's the highest that.
Correct.
We can hope.
it was a fluke, they already have. If anybody's tried to sell or ask for comparables on their home in the last 8 to 10 months, you know that they're down. I can give you an example. In the height of the market, which was actually the height of the market, was March 2022. Highest sales were March and April 2022, not June 2022. They went back down. Okay, so if you look at that, the ones in June are less, right? But since then, I can give you an example. Danny, our agent, lives in Morrison Ranch. And in my own community, I live in Tuscany Ridge, both in Fountain, right? And hers went down about 100,000. What month are we in? May. They went down about 100,000 during August, September, October, from the height of the market, which was March. Okay, 100,000. Huge. That's a huge swing, right? Then, yes, they've gradually come up slightly. So they're probably down about 70,000 already, like on average. So for the next cycle, we're gonna be down. And everybody's like, they're never gonna lower taxes. This isn't increasing and lowering taxes, y'all. That's not actually what this is. It's increasing and lowering value. So try to look at it in that aspect. This is your home increasing value, decreasing value, increasing value, decreasing value. As that happens, taxes adjust for that. I bought in 2008. I said I was gonna use this as an example. And you're gonna be like, bad realtor. I bought in 2008 in May. Oh, fun, I bought a new build, it was so great. Market crashed, October. So, when that happened, everything went down. My property taxes my first year were pretty high because there was no house on it, we built it. So taxes always go up a little higher when you build. So the first year, $1,200. But when they did this again in 2011, because in 2009 they did it, it was 12. 2011, they went down to 856. So I can promise you, because it's happened, I've watched it, I've been in my house long enough, it happens. They go back down. So if you're panicked right now, this is 24 months, y'all. 24 months, 24 months. We gotta figure out how to make it. My payment, and my taxes. So let me show you mine here. $522,804. I surely wish that were the truth. I would put it on the market right now. Right? So that's my new value. My old value, $342,739. Where did they get that number? From 2 years ago? Well, funny, how many of you did a refi? How many of you did a refinance to get your interest rate down? No one? No one? You did.
Yeah, you did.
So that number on here, and I didn't put this on the screen, but that number, your actual prior year actual value is from 2 years ago. And then your current year is what they're assessing you at now. So there's two different numbers on your blocks. And that's what those are, okay? That $342,739, weirdly, This is exactly what my refi appraised for. How strange is that? I mean, where would they have gotten that information? And so now they're basing that on my number. So on those situations, maybe a little harder, because we have an actual appraisal that they got that number from, okay? I'm going to argue, I know, don't get angry, I see angry. I see angry. But, we're gonna work on it. I know I'm working on mine, I'm doing it either way, yes.
They actually did appraise my house at the total value at the time.
Mm-hmm.
They appraised it at the current, amount paid.
Okay. Well, I said the same thing, because if I look back to that time when they did it, I told, like when the guy walked through, I was like, I am a realtor, you are an idiot, this is not the value, but if that's where you want it, we will just leave it there, right?
And they left it at
Mhm.
3-bed, 2-bath, when it's 5-bed, 3.5-bath.
Yeah, that was nice of
Looked
them.
like an additional 1,600 square.
Then you may have a real good case, because that's why I feel like I also have a good case, so I think we're gonna be okay. Also, here, the value is given as if the actual value is completed 6/30, as I said, and, this is it because that was a prime time in the market for the end of the sales period for them, so that's what they look at. And then I did put here the 1.3 to 1.5%. Did I talk about that? Okay. So, when you talk to the tax assessor's office, what they do is they look at month over month. I'm gonna do a little drawing right here to explain this because it's not always the easiest thing. But if they're looking at comparables, so we're looking at homes that sold, right? So if a home sold, for, let's just say, 400,000, okay? Cause I put that up there. I wanna do this exact one. It sold for 400,000 in January 2021. This is what we were talking about a minute ago. So 2021, January, is 17 months prior to the month that they're gonna actually give you a valuation for, which is June 2022. So they're saying, if your same home that sold on January 2021 sold instead on June 30th, 2022, this is how much it would have cost, okay? That's the adjusting you're talking about. And so, you say, well, where do you come up with that number? How do you know what that number is? I can tell you we've done the math and we've looked at it for all of like Lorson Ranch, for instance, and theirs is 1.4. They basically said that month over month values when homes were increasing, month over month, they were saying they were going up between 1.3 and 1.5%, which is what's up there. And so, month over month, as those values went up, 1.3 to 1.5%, that's what they're using as their go-to numbers. Is it true that the market month over month was going 1.3 to 1.5% over month over month? I say no. But I will tell you this, they're actually being conservative because month over month, it was going up much higher than that in the height of the market. So they actually were kind of conservative in that number. So 1.5%, because I use 1.5 because it's a round number and pretty easy. And so they look at the sales price. So for 1 month, 1.5% of 4,000, why I say 6,000? If you do the math, it's $6,000 a month that your house was increasing in value. That's what they're saying. So,
Is that how they do the adjustments every 2 years? They just look at the overall market and just assume that your house has the same increase or decrease and just
it's
do the
not always
math?
1.3 to 1.5. It's based on that market. So if the next one that they do in 2025, if they look at the months previous, so they're gonna look from now, January 2023 until June 2024. So if you wanna know where your tax will be at that time, you're gonna watch everything between now and June of 2024. Cause those are the months they're gonna pull. And month over month, if it goes up, they're gonna say, oh, we have to increase month over month, 1.4% for this community, 1.5% for that community, 1.3. If it's going down, they're gonna do the same thing. They're gonna say, oh, there was a big drop. It went down 1.5% month over month. Values started dropping by 6,000 a month. So it's gonna go the opposite direction. That's why I'm saying this isn't a tax thing. This isn't a government tax thing. And I think there's a huge misconception there. This is a property value thing. This is a real estate investment thing. This is over the life, when you own a home, we all hope owning a home in the end is building our investment bank, right? Like we're wanting to earn money somehow. This is our retirement, this is our security. We're putting money into ourselves. That's why we bought a home, we're not renting. That's why we do this. And so, if so, this is a small blip. This one became a big blip, right? In that number. But if your plan is to own a home for 5 to 10 years, then this is a small blip in that big bank, okay? And I want you to try to look at it like that. It's hard when it's like all of a sudden you're getting this huge bill and you're like, whew, let me breathe. What's happening here? How much am I gonna pay on my mortgage next year, right? So I'm gonna stop for a minute because we did go over this. And what that meant is, so for 1 month, it would be $6,000. Over the 17 months that we have to add on to the $400,000 sales price, that brings the actual value that they're taxing you on to 502. That's how that math gets done. And we're not looking at one house sale, okay? This is not one house sale. We're gonna look at 3 to 5 home sales in your neighborhood, and we're gonna pick the best 3. The ones that sold for the lowest amount, the latest time in 2022, right? Because that's what we want. Because that's what's gonna give you the best numbers. Some of them may be in 2021, they may be when we give you your comps. However, when we give those to you, it's because we've done the math, and month over month, their number came out lower than the June comparable. So there's still a better comp than a June comp. Because even adding that 6,000 didn't bring them higher than that June comp at 400. Okay, so we're doing that math, that's our job. We're doing that for you and emailing it to you. Okay, so that's what you'll have, are those hard numbers. Take this PDF, and we're gonna show you in a minute. So what does this mean for your payment? How many people know what this means for their payment?
We know.
It's gonna go up.
Does
Your
everybody,
insurance goes up, everything goes up.
your insurance won't go up because of this, your insurance just goes up because insurance companies are, you know, kinda jerks. I can give you guys something to make you feel good about insurance. We own a home in Florida. Woo, dear Lord, you do not want that insurance payment that just came in. It just makes me wanna cry.
How much
So-
was it, hon?
It doubled, so.
So it doubled
My
to what?
parents' home, they just got a quote for $18,000, if you can believe that. Is that a thing? If you could afford 18,000, wouldn't you just rebuild a home? I don't know. That seemed kind of crazy. Question?
Well, I was just kind of thinking about, you know, the 1.5%
Okay,
that
can
you're
you go back
using
there?
there.
Mm-hmm.
And I just did the numbers, so like if you did 24 months
Mhm.
times 1.5, it would have been 36%. So theoretically, at most, your property value should have increased by 36%.
And most increase between 44 and 49.
Okay,
Can
because
you
mine
have
was
that
almost,
map?
mine was almost double, and that's what made
Where
me
do you
just say,
live?
what the heck is going on?
Where do you live?
This house is in Strathmore Valley.
And it doubled.
So that's normal, huh?
Stratmore is fun little pocket. You right here where it's red?
Yes.
Yeah. Yours is more than 55%, that's why we have a map. So, yeah. I'm really sorry. Stratmore Valley was historically low, right?
Yeah, it was cheap.
And the problem is, and here's what else, like, how many of you are happy when flippers come in and make your neighbor's home that look like garbage, look like great, something great? And you're like, oh yeah, oh, that's increasing my property value. Boy, did it. It increased yours a lot, because that's exactly what happened in Stratmore. Stratmore specifically. We, you can turn that off, the ringer. Stratmore, that area, I also work with investors at times and that remodel and resell homes. And man, this area was hot in this term for buying and remodeling. And then they put them back on, and all of a sudden this area was getting like over 400,000. I mean, gosh, I remember when I bought a home over here that needed remodeling with one of my flippers for 80,000. Have you been there a long time?
Yeah, we originally bought the house in the 90s and it was like maybe 70 or.
Correct. So see,
Yeah.
we're gonna look at yours.
But
a
this
little
is just over
closer.
the last 2 years, I mean, I
Correct.
didn't even count that.
But this is the last 2 years. That's what
That
happened.
sounds big jump, yeah.
They saw one of the biggest jumps. And so it's this jump that's the problem. This area, this yellow area is the same as where we are. I know it cuts off a little bit here, and so you can't see all the detail out to like Lorson. Lorson is in orange area, I believe, the 50 to 54%, but most of Fountain is in the 44 to 49%. And then Stratmore, of course, our fun little pocket right here. Okay. And this is based on home sales again, so we wanna look at those a little closer, because if we can find some of the ones that weren't remodeled and use those numbers, we're gonna be in much better position, okay, to use those.
So what's the, say the diameter, mileage, or, cause you say communities on that Cumberland Greens, so
Mhm.
can we go to,
Oh, we're gonna
like,
talk about
how far out?
You could only
As far as 1
use your community,
So I'm in Cumberland Green.
and you're in Cumberland.
Which one is mine?
Cumberland is also in the orange.
Okay. Ooh.
I'm gonna tell you why Cumberland, Lorson, Ventana, who am I missing?
The
The New Glen,
Oh, yeah.
the New Glen.
Mhm.
Everybody who wanted all the special things? All are, I'm gonna tell you a saying I have said since I was like 24, 25, special isn't so special. If you're Star Belly Sneech, you want that little star on yours, you get to do this. No, metro districts are the absolute bane of my existence. You can ask Danny. Danny lives in Lorson. What'd I tell you to do when you got hired? What did I tell you?
Not work Lorson.
No, but what else?
Move out.
I told her to move.
She told me to pack my stuff
Told
and
her,
get out
get your
as
money
quick as I
out
could.
and move. I'm sorry. The one thing you'll know about me is I will always be honest. I am not lying. I am not selling you. I am telling you the truth. I never sell homes in Lorson to people, because I tell them what it means and let them decide. And the minute you know what it means to live in a metro district, truly know what that means and how it's going to hit your pocketbook, you won't do it.
I had a realtor in Denver, cause I was looking in Green Valley Ranch, and she told me I could write off my metro taxes.
Okay,
And I haven't found anybody that,
I'm a
When you figure
realtor.
that out,
I'm gonna tell you one thing, I'm gonna say this, and you're gonna read between all those lines. I'm a realtor, I'm not a CPA, I'm not an accountant, I'm not an attorney. So those aren't things I would ever say personally as a realtor,
outside of our scope.
because that's not what I hold a license in. Okay? So I think that's probably not great advice, because it came from somebody with a license in real estate who's a realtor. Okay? So realtors should stick to real estate facts. Okay? Real estate facts of Metro District are that Metro districts have that special assessment. Did you see it on your tax bill when you got it this year? And I don't mean this bill. This new assessment is an actual estimated assessment. This isn't a done deal, okay? Your actual assessment, Danny's, there's a line item and it says Lorson Ranch Metropolitan District. And it's about
1794 is what mine is. For
currently.
Yes, just the Metro.
Right. So $1,794 for Metro. What is that for? Parks. It's for them
Sure as
take.
hell not building them
Right.
See, look, we got like two.
Yeah,
of
these
them.
developers who own the land put them in. This is why we're doing this today, because I want people to be educated on that, on what it is you're doing when you purchase property and where you purchase it, and what questions you should probably ask. Metro districts, are supposed to have something a little extra, right? So Ventana has a rec center, they have a pool, they have parks. Cumberland Green has the green belt, the golf, the frisbee golf, the parks.
That's all Fountain.
Yeah, that's
not
the city of
Fountain.
Fountain.
That's city
I
of Fountain.
know, but they say that's what they said when they built it.
What is a metro? What does
A
that
metro
mean?
is an HOA. For lack of better terms, y'all, it gives you rules that you have to follow.
but nobody
You can-
follows them.
Yeah, you can
Nobody
call it,
enforces them.
you can call it an orange, you can call it an apple, you can call it an HOA, you can call it a CDD, I don't care what they call it. You're paying money for a service and you're either getting it or you're not, whatever that is. I live in a HOA, I love it. I want them to monitor people, cause I don't wanna live next to somebody with a purple house, so that's just me. Some people don't want that, some people do. So HOAs can cause a big conversation, but the Metro District, you're getting charged the new mill levy
So-
on that fee too.
So there'll be a separate, I'm trying to think back, so there'll be a separate assessment then? It doesn't come in.
I'm gonna show it to those people who live in that
It doesn't
area,
come to the.
cause I wanna show you what it looks like on your actual tax bill, and I didn't pull an actual tax bill. There's a line item, I know this is small. It says Morrison Ranch Metro 3, and there's a line item that says 1794.94. Now, what's your new, like, in the new one, you have to understand that mill levy and the math that you do to do a mill levy, they're looking at your whole tax bill. They're not just picking out and saying, oh, we're not gonna do that on the Lorson Ranch Metro part. Oh, no. So her bill went up $1,500 a year. Isn't that as much as somebody pays in a year? I think that's more than what I paid in a year up till now. Okay, and that's just for that her whole tax bill, but it's because half of her tax bill is the Metro. Half of your tax bill is Cumberland Green Metro. So your taxes are double what somebody else's would be.
And those Metro taxes never go away.
No.
That's something that's going to stick, it's not going
No.
anywhere, and so we pay a portion of our Metro and then everything else, which is one
So
of my
you
taxes
have to
next year
choose
disgusting.
a Metro or not. That's my point. As a buyer, you have options. The problem I see, sadly, is they aren't educated in their options. And that bothers me as a realtor who does real estate in a way that I want you to understand the process, because I want you to be happy with the result. That when you say stuff like what you say and what you said, that like stabs me in the heart, because those are things that you should have been told before you purchased your home, and that may not have happened, and it may not have been explained to you. So now you know what it means, you're in it. You
So
just,
if we're paying all this, so how can a developer renege on all the things that we're getting?
cause the
tax
developer's no longer in it. They're no longer in it. That's an issue with you and the city. And who runs the Metro? The city.
We're
Yeah, see the vicious
we're
cycle?
county.
Where are you?
We're unincorporated, if you're
You're
in Morrison,
unincorporated.
we're unincorporated.
Right. Yeah, developers are still developing Morrison. Morrison's a little bit of a anomaly.
Shithole.
You're not.
Yeah. Okay, I am the realtor, so I can't really say. But I can say that I personally, and this is my personal opinion, is I want to control where I spend my money. That's all. And how that's affected. So I make choices based on that in my life. And if that's what you wanna do, you'll make choices based on that in your life now that you know different. So that's what's happening and why your bills are scaring you. What community are you in?
Yours.
Mine. And so yours went up,
You're bored.
I know. I just wanted it. So, yours probably went up about 800, 900, your tax bill?
It went up 16.
And it was how much?
It was,
Like 11?
no, it was lower. It was
Lower.
870 something.
Okay. Yeah, so I think we could probably do something with that. Mine was about 12, 13, and it went up to 21.
Well, it's they assessed my house for less than what it actually is.
Mm-hmm.
I mean, in terms
Originally.
of space and size of my home.
Mm-hmm.
So that's what I don't know.
We'll look at it in more detail. Some of them we have to look at in more detail based on your square footage and finishes you may have done, things like that. So those we'll look at in a little more detail. Okay, go back to the other screen that we were on, because I want Chris to talk. This is where I'm saying, some neighborhoods, if you don't have a metro district, yours probably went up somewhere between like 600, depending on your community and where you live, and I'm generalizing big time, between 600 and maybe $1,000 a year. And like for me, mine went up 800, I think it is, and it's a total of $67 a month. So Chris, I want to introduce y'all. Chris Hodges is our lending partner. We've worked with him for many years. He advises us on our personal loans, when we should refinance, when we shouldn't. He's kind of an all-encompassing financial advisor in a lot of ways. We have a lot of first-time home buyers, and he educates them on the process ahead of time so that you don't get into these pitfalls where we talk about metro districts, we talk about HOAs and how those taxes affect your loan year over year before you get into the home. So I wanted him to talk a little bit today with you about how this is going to affect your tax bill next year. I think a lot of people have been saying to me that they just watched their tax bill go way up and they just paid it all in their escrow, their bill went up this year, and it's not even taken effect yet, y'all.
Yeah, it hasn't gone into effect yet. So, yeah, now that you have the really bad news from Bryce,
Sorry.
I'll put some icing on that and make it worse. So, how many people have owned a home for more than 2 years in here? Okay, so you're probably accustomed to when you're getting to like your annual date on the home, like your anniversary of owning it, you're gonna see what's called a escrow analysis done, right? So the mortgage company does an escrow analysis, and what that means is that they've paid your insurance for the last year, they've paid your property taxes for the last year, and they're gonna say, we were either short in our escrow account, so we need to increase your monthly payment, or there was an excess, we had more than we needed, and so now we have to give you back a check. Now, there's certain rules and laws that go into play. If it's less than like $500, they don't have to send that money to you, they just keep it in the escrow account, but they lower your payment going forward. If it's more than 500, then they're obligated to send you a check within 30 days so that you can take it and do what you want with it because they collected too much. So, that's the escrow analysis, okay? Now what's gonna happen here with taxes is this. In Colorado, we pay taxes in arrears, okay? So if you notice when you look at your form you got, the taxes for 2022, right, were just paid in February and they will be finished being paid in June, okay? The tax statement you just got is the taxes for 2023. That will then be due in February and in June of 2024. And what that means is that your taxes haven't gone up yet. They're about to go up. Now, here's the problem. Those are your 2023 numbers, okay? What happens is as a mortgage company, we're only collecting based on what 22 numbers were. We do our analysis. Was there enough in account to pay your 2022? Yes, there was. Great, we're gonna lower it, or we might have to increase it because of insurance or something like that. But what's gonna happen is now we're gonna get the bill in February and we're gonna go to pay it and we're gonna be short. And by some of you, it's gonna be by a lot, right? It's gonna be $1,600 short of what it needed to be. So now we have a problem. Mortgage company's gonna pay it because that's what they're obligated to do. But they're gonna say, now we have to increase your payment monthly to meet what the new bill is for next year, and you had a shortage, so now we have to get that money back as well. So not only is your payment gonna go up $67 a month, but it's gonna go up the difference, okay?
Or
That
they
you
give
were
you
short.
the, or they'll give you the opportunity to
So,
pay the difference
correct.
in
Now-
full.
Now, what I was gonna recommend, and what I do recommend is this. You have the knowledge right now, and most people won't do this. They'll get it, they'll be upset, then they're gonna forget about it. Do you have a question, Charles?
Yeah, so I actually just had a escrow analysis done on me.
Okay.
And my payments went up almost $300,
Okay,
$277 a month,
okay,
because of the shortage and the assessment of the increased taxes.
okay. Did they say it was the taxes in there?
Yeah.
Okay,
It
perfect.
was that, and like I said, the shortage from the shortage. And again, yeah, you're right, they gave me a letter saying that I could pay it all, the shortage now,
Or add
or
it, yeah.
add it in. But basically, I went from 1247 to 15 whatever now, 1540. And I was like, what?
Right, right.
So, is that what why am I?
Correct, that is exactly why. And here's what happens, it can happen on insurance, this is where people mostly see it. In the years past, we rarely saw it on taxes. It's such a minuscule amount on taxes that the mortgage company has dialed it in that you're almost always okay on taxes, but it's the insurance that gets you, right? Because insurance is getting reevaluated, most people don't check that, they don't shop that. And then what happens is they increase it $600 and now your payment's gone up, there's a shortage, the whole 9 yards. Now you've got the taxes that jumped up significantly. So I urge everybody to pay attention to that and take action now versus wait, right? Because the common person is gonna wait. Common homeowner is gonna say, I got this, man, I'm really pissed off about it. 2 weeks are gonna go by, it's gonna end up in a drawer somewhere and you're gonna forget about it until that escrow analysis happens. And then you're gonna be pissed off, like, what the hell, I just increased $300-400 a month in my mortgage payment, I'm not budgeting for that. So, what you can do right now is you can, most of you, when you go on to make your payment, if you make it online, you have an option to do additional to escrow, okay? Normally, I don't recommend that because you don't need to. If you're ever gonna pay more than your current mortgage payment, you pay it to principal, okay? But in this case, you have the ability, if you wanted to just slowly over time start in, like putting a little bit more into that escrow, we can do a calculation. When you sit down with Bryce and you do the appeal, I will gladly help you as well, looking at where your current mortgage is, where your current escrow is, where these new taxes are gonna put your mortgage payment, and I can give you what you should add monthly to that escrow to make sure you don't have a shortage when they do the analysis. That would be my optimal recommendation, okay? The other thing you can do is just save it yourself. Don't give it to the mortgage company. Put it in your own savings, just put it aside, remember it, don't forget it. Let it earn interest for you in a small, account somewhere. But then, right before you know taxes are gonna be due in February next year, make sure you do that increase or put it in there. Or wait and let them pay it, and then pay them when you get that notice from them. Hey, no, I'm gonna pay it in full so my payment stays the same.
Most people get an escrow analysis every year, and it's on your anniversary month.
Correct.
So whatever month you closed on your home or closed on your refi, if you refi, that's the month, you get it the month prior to that.
Prior to it, correct. Yep, so if you, again, if you would have bought your home in June or you did a refinance in June, May, this month, you would have received your income analysis, or your escrow analysis. So, again, just be cognizant, we can help calculate that difference, save it yourself. If you're not good at saving, make that little extra payment now so that you don't get hit with that increase of $300, $400, whatever the amount is gonna be in your next mortgage payment, okay? That's the big key takeaway here, is that it's bad enough you're gonna get hit with an increase for your taxes. What you don't wanna do is add on top of that for the difference that's owed, right, the shortage.
So you always recommend covering that shortage? I wish I knew that last year.
Yeah, it's
Well,
too
You don't
hard.
always know what it's gonna be.
Correct.
Last
Well,
year
there
you
was
didn't.
I had a shortage last year.
Yeah, but last year you
Yeah.
wouldn't have known. This year
Yeah.
you're getting this assessment.
Exactly.
So for me, I know that on my mortgage every month, it's gonna be a $67.77 difference because I've done the math and the difference. And if it holds with where the appeal, after the appeal with the numbers that I currently have, that's how much my mortgage will go up each month. So I can just pay it now on my mortgage
And
now.
each individual is gonna be different, right? Every homeowner will be different. It may be that when we work it up, you say, you know what, that jump from 12 to 15, I don't like it, but I'm okay with 15, so I'll deal with it. I don't wanna make a lump sum payment. Others will say, you know what, that 12 is very important, I'm on a fixed income, I'm getting disability, or I'm getting my retirement, and I wanna keep it there. And if that's the case, I would urge you to, let's come up with a plan now so that you have that money, so that you can either pay the difference or just pay it up front before it hits, and that way it doesn't look like there's a shortage, okay? And that'll keep your monthly payment where it's at now. Now, the other thing you can do for yourself, and I would highly encourage you to do, is start looking at insurance. The average American homeowner does not ever look at their homeowner's insurance again after they close, okay? They just don't do it until they have an escrow analysis that comes back showing that they owe money and there's a shortage. Be proactive with that,
Can you
okay?
give an example of that, because in USAA was doing.
Yeah, so USAA, I don't know if they've done one recently, but they have in the past, right? So fun fact about Colorado Springs, we have more veterans per capita here than almost anywhere else as far as city population. And a lot of those veterans use USAA because USAA does a phenomenal job of marketing and they're actually a pretty good customer service, company. So when we have a hailstorm come through here and it starts tagging houses, especially in a very military populated neighborhood, USAA took the brunt of those claims, okay? And the big one that happened, and it seems like it was yesterday, but it's probably like 6 years ago now. USAA took like 60% of the claims in Colorado Springs. That was a massive loss for USAA, and so what they ended up doing is they just jacked up all the rates, right? And I had USAA, I had them for years, never had a problem, and then all of a sudden, kind of like with taxes, I turned around, and even though my house wasn't affected by hail, my homeowner's insurance went through the roof. So I ended up, car insurance, and so I immediately turned around, started calling and shopping my insurance, and guess what? When you shop your insurance, you'll find out you can get not just a little bit better, but incredibly better sometimes, because USAA or any other insurance company is just slowly killing you, right? On a normal year, if we don't have big hailstorms, big fires, big things like that, you're still getting an increase, and it may be $200, but $200 spread out over 12 months doesn't seem like a lot. But after 3 years, 4 years, 5 years, 10 years, all of a sudden, you're paying significantly more than you were in the beginning. And if you just pick up the phone and call State Farm or call a broker or call somebody else, and we have connections, we have people we'll put you in touch with, they'll actually shop you as a new client, and guess what? They wanna win your business. They're gonna get you lower insurance guaranteed. If you really love your insurance company, whoever it is, you then just take that quote and you go back to the insurance company and say, hey, I got a problem here. You're saying my bill right now is $3,300 a year, and I just got a quote for $1,200. So either you're gonna get there because I like you, or I'm gonna go over here. So I encourage you to do that. It's encouraged that every 2 years you should be shopping your homeowner's insurance. I would encourage you to do it now, even if you just recently changed, mostly because you're gonna have another big increase because of taxes. You might as well see if you can get that insurance a little lower. Okay. Any other questions for me on that? Yeah.
Well, I called USA yesterday for all this here, and they said that my insurance, so the amount has nothing to do with the tax assessment
Correct.
or the thing here.
That is absolutely correct.
So they said that no matter what that is, that's gonna stay the same.
Correct. Your taxes and insurance have no correlation, none whatsoever.
Think so.
What does is the events happening locally, okay? Hailstorms, fires, floods. If you live in a neighborhood that's seen an increase in break-ins, it affects your insurance. If you live in an area where even, there's just car accidents, right? There's not break-ins, but 2 people had kids, on the street, that their car was parked on the street and it got sideswiped by somebody, and that was a claim they put in. All insurance agencies can see the claims in your neighborhood, and they base the risk off of that. So you may have a perfect background when it comes to insurance, but at the end of the day, if your neighbors don't, it could impact your homeowner's insurance, okay? So you're right, insurance and taxes have nothing to do with each other other than they're in the escrow account together. But you can see annual increases in your insurance more frequently than you'll actually see in your taxes.
Does everybody understand their escrow account? Okay, cause I just wanna make sure, cause that's the bigger question, is like the pools, it's in that
Yeah.
pool of money in your escrow account, it all gets paid out of the same pool.
And the only reason I bring it up, I know this is a tax assessment class, but I bring it up because as you are gonna prepare for your mortgage payment going up, one way you can help keep it a little even is by shopping your insurance, right?
Yes.
And again, I'm not even saying you should leave USAA. I would just say, ask them to take another look at the insurance. have a couple other people look at the insurance. If you get it lower, bring it back to USAA. They'll
It's a
almost always
great
match it.
idea.
They almost will always match it. Again, I've had USAA for years. If you bring something back legitimate, apples for apples, they will almost always match it.
It's a great idea, especially because if your property taxes have only made your, payment go up like mine, $67 a month. If you can get your insurance down $67 a month, your payment's gonna stay the same next year.
Correct.
Or close to.
Correct.
Right? So that's what he's trying to say, is it's not one's affecting each other, they're not affecting each other, but one can definitely help you out for the other that's
Yeah.
stinging you.
So, as you guys
Good
talk with
point.
Bryce, if you have questions and you want me to run any analysis on what your payment might increase and how you might be able to combat that, just let me know. She knows how to get a hold of me. Thank you.
He also does have a, good, insurance broker that we do give out. His name's Patrick Hennigan, and he is a broker, so he goes through all the companies to get quotes and finds what he can get you as the lowest quote. And that's sometimes helpful too, for insurance purposes, a little aside, if you need that, we can get you that number. Can you make a note for me to, put that in the email to everybody? That way you have a broker's number and you're not having to call State Farm and Allstate and, every Geico and every company around. He does that. He calls and shops it, puts it through a program that gives you the lowest rate.
That would be helpful.
And so you can just contact him. So we'll give his number out in the email that we send over as part of your process. Does that help?
A lot.
All right, so any other questions? We're good? Okay, so let's go on. The next, thing that I kind of wanted to go through, can you scroll down to the bottom really quick? Down. Okay, so we finished there. Let's go back to the top. Sorry. I flip-flopped my screen. So my page 1 is on the bottom, my page 2 is on top. That's okay.
I have just a quick question.
Yeah.
So as far as square footage wise,
Mhm.
I just redid all my insurance and stuff, but they didn't really care that the basement's finished. They only wanted to know what the main level square footage was. So when these tax assessments are done, like mine, it says it's 1,800 square foot. Well, I have a 3/4 finished basement, so do they, cause it was built that way when I bought it, so.
Yeah, didn't you?
How do they assess, like, is this tax, cause here it says it's only the 1,800, not the 30, whatever.
Mine
Okay,
only shows the 1,500 for
Yeah.
my main level 2 other rancher.
yeah.
Mine only shows the main level 2, if that's normal, I was wondering.
When you have tax assessments done and comparables, what happens is, this isn't an appraisal, and this isn't an appraisal class, and I don't do appraisals. I do analyses. So what happens is, appraisers look at full square footage, right? There are different values you get on square footage. So anything what's considered above grade, so that's above ground, is where you get taxed. But you do, if you have, it's why mine are showing as 522, right? I don't have a finished basement, but I have a second story nobody knows I have, apparently. It's like a secret, kind of like a secret closet, that little upstairs. People, when they look at the outside of my house, they're like, you have a 2-story? Doesn't look like a 2-story. Well, great, it doesn't, but I have 2,100 finished square feet because the upstairs. So people with a ranch are probably getting away with murder. People with 2 stories and a basement, you're getting both levels above grade. So you're getting hit a little harder on your taxes. If you don't have a basement at all, that's probably best because it's on slab. Because they are, when you go and look, I don't know if any of you, I'm gonna give you some links here. This first link, it is where we're gonna kind of go through the appeals process, but this first link on your sheet, that is where you go to look at your actual property taxes. You can see your bill that you've paid year over year for your home. There's lots of great information there. But you'll see on there your full square footage. It will say total square footage, and it will say above grade. There's both on there. They are taking into account that your home, like me, for example, your home's 3,500 square feet, but they're looking at the 2,100 that's above grade. It gets taxed at a higher rate. Like everything below, they look at for valuation, meaning when they're looking at comparable homes, they're looking at other homes that have a basement. Okay, that's why when we go through this process, I'm gonna show you the comparables analyzer or whatever that they have on here. How many of you went into the appeals portal and looked at how to do the process? Anyone? Oh, well, fun, we're about to do that. So let's move along. You're gonna see exactly what I'm talking about. And this is what I was saying, don't use their appeals portal. Okay, so. Where are you going? I had all those pages all set up, what are you doing, Danny? No, go to the front page. So when you go to the El Paso County Tax Assessor, it's the first page. Scroll up. It's the top, it's fine. So this is the page for El Paso County. Smiling. This is the guy that everybody wants to punch today. That's just kind of how it goes. But it's not his fault. So if you scroll down, it gives you a bunch of current news and events and things like that. And so as you scroll through here, you'll see there's a lot of different information. It'll give you information on if you are a senior and there's senior exemptions. If you're a disabled veteran, you have 100%, you can get a veteran's exemption. And then it has this thing, appeal your property value. Notice where is that? Appeal your property value. It is on dot 1. So it's the first dot as you're scrolling. So right there, you click on that, which I'm already in it. So go to that one. And when you click on it, no, that one, this will come up. Go back one. Go back one. I had them all in order, Danny, what's happening?
I clicked on what you told me to. Same thing.
I'm like, where is it? Hold on one second. Just go to the far top and then.
While they're going through this, how many vets do we have in here that are 100%? Have you filed for that property tax exemption?
Recently.
Good.
So I'm hoping to hear.
Deadline's July 1st. There's a little argument between John and I. He thinks it's June 1st. I think it's July 1st. So we're gonna do the earlier of the two and just get it done. But point is, get it done. Because if you are
But it won't be
100%.
applied until next May.
What's that?
It won't be applied until next May.
Correct.
The thing is, if you missed that June or July 1st date,
Yeah.
you have to reapply next year.
Yeah, you have to wait on the entire year, so you miss out on the entire year, and you don't wanna do that. So regardless, you'll at least get it down for one of the years. So here, when you clicked on that first link that I showed you on this form, on this page, the very number 1, this is our process to appeal. You're going to click on that, and it takes you to this page where where it says you can put in your address. And, is that the right one? No, that's the second page, Danny. To appeal, it's this one. And then you click on the appeal process and it takes you to page 2, which is going to be this link, which is where you go to put in, number 2. Where you go here and you just put in your address. And so when you like mine is Riverton Path, and you put in your address, the next page will come up. And it looks like this, and this is your assessment page, right? So you can see here, here's my property. Hello, house. Hello, house. There we are. Very old. That's an old car. I don't have that car.
That's the Durango.
Look, your new number comes up right there now. You see that? That's my new number. I didn't like that number. When you scroll down, you see right here, it says appeals. Click. You don't have to click yet, Danny. So let's roll down a little more. I want to show you something because what this explains is your what you guys are talking about. So this says I have a split level house, as you can see here, and this is what I want to point out. It says it's a 3-bedroom, 2.5 bath. It tells me it was built in 2008. My above grade is 2,111 square feet. That's second story, main. And then you see here, it's breaking it down. So this number's then broken down, first floor area, and then the above first floor area. Cause I have what they consider a split level, it's a 2-story. Then, here's the total basement. And it tells you if it's finished or unfinished. So when I'm telling you what they're putting on your paper there is one thing, but they know it all. So you wanna look at what it says here. Cause they're comparing your home with other like homes.
That's for this tax
For
assessment.
this.
So it'd be total finished square footage.
They're looking at the whole overall picture, your floor plan versus other people with a like floor plan of your home in your community. Okay? That's what they're looking at. Okay, so scroll down a little more, please. You can see there, that said market value 450. That was, but at the top it says the 522. That's not the same. Okay, so this just shows everything that's ever happened. Now here, county treasurer tax information, we're not gonna click it, but when you click that, it brings up your bill from this year, okay? So I'm just showing you a little information so you can know where to go to find all your information, okay? This gives you everything. So then you can compare this year's bill with like what you're assuming you're gonna have next year, all right? A little bit. It gives you information in case you lost the one that came in the mail, because you never pay it because it's paid out of your mortgage. You sometimes lose it.
I
That-
didn't get mine.
Yeah, you can find it right here.
Thank
Okay,
you.
sure, no problem. All right, so up there where it says appeals, this is where you're gonna wanna click to start the process. And when you do, this page will come up and it'll look like this. Filing an appeal, here we go. We're gonna do it. They're gonna get 5 million of these. So it's gonna be fun. They're supposed to give you an answer back by June 30th. I don't know if you know that. But they're gonna be a little underwater, so we'll see. But actually what they told me is they are doing it quickly. Like if you're putting them in now, they're going through them right now. So they're starting the process quick. All right, so you may not have to wait. And the good news is you don't have to wait that long, right? Deadline, June 8th. You'll know something by June 30th. Okay? Don't wait till June 8th.
That's going at light speed for government.
It is. So here we are. This just basically, you'll want to scroll up just a little, Danny. I mean, up, yeah. So here, this is if you have somebody else doing it for you, of course, agent authorization, but most of us are gonna do this ourselves, right? I'm not doing it for you. I'm not doing this for 300 people. No. But I'm gonna give you the tools. I'd rather teach you. I think that people like to learn how to fish, and then they can survive. So, full name, that's us as the owners, so we're gonna leave that. And then we're gonna enter our phone number and our email address twice, and then we're gonna hit the next button. We're gonna go to the next screen, and then the next screen, this is what's important. This will show up what's on your bill. And then this box is gonna be blank. And in your email that we send you, we're gonna give you a number, okay? And we're gonna tell you what that number is. This is where I said, I don't have your assessment. I don't have that little sheet of paper for 300 people. I don't want it. Again, it's our job to figure out what the numbers say. This is about numbers, folks. They either work in your favor or they don't. I can't make them up. I just assess them. I've been doing this 16 years. And I can promise you, numbers are my thing. Numbers are my thing. I could do nothing else all day but sit and do numbers. I love them. I know the market probably better than most because I study the numbers. That's how I know they're 1.3 to 1.5% numbers a little off, because it was more than that, okay? So here, we're gonna give you that in your email. Then what you're gonna do is you're gonna have to check a box. The reason we're appealing is because there are similar properties that were sold for a different value, because I'm gonna give you other values. That's the hope, right? If I send you an email and that number that says 490 is the same as what's on your paper, then you're probably not gonna do this. Okay, because whatever number you decide to put in instead and say, that Bryce, she said 490, but I'm gonna just write 460 in here and see what happens. Probably not gonna work for you. And I know some of you can try it, go ahead. But it may not happen, okay? So I'm not promising everybody's taxes are going down. In your email that you already received from us, you know that. I said that, we're not promising that. We're gonna just give you the real number for your home, all right? Then, you're gonna click that box and then you're gonna scroll and you're gonna click next. So see, it walks you right through it. And all these instructions are also on this sheet. So in case you forget, it's here, and you're gonna get a copy of the video.
We're supposed to fill in that little text box below there.
Yeah, what was
Yeah.
that called?
So here, say that again?
What was that box
Go
called
back.
that we have to fill up?
See, we can always go back, yes.
Yeah.
So here, this one,
Yeah.
similar
Owners'
property.
opinion.
So here, this was my example, thank you.
Okay.
Thank you for bringing me back. I missed that. Here, I'm gonna put in notes as to why mine is different and should be lesser value. I'm gonna give them houses for my house that have a finished basement that sold for $522,000. I'm not gonna give them the ones without a finished basement. And then I'm gonna say, I also only have a 2-car garage and I have no exterior other structures. I don't have a gazebo, I don't have a shed, I don't have a bunch of crap in my backyard that's been built out there to make it beautiful. I don't have any of that. So I'm gonna give them reasons. So you think about the comps I send you, and you know your home. Downplay yourself. You know, there's a time to say, I'm the best. There's a time to say, I suck. Now we're saying I suck. So everybody, we all suck. This is the time. Okay, y'all aren't so special. I would love to say you're special, and maybe in a couple years I can do that. But right now I'm gonna tell you not so special. Everybody else is way more special than you. Think of yourself like that. We all got our egos on the back burner for a little bit. When you refinance, that's when we wanna be. This is the best. Okay, so those are my notes for myself, right? Other things you can put in there, these are good examples. The other thing is, if it's all original finishes, you never upgraded anything. In the comps, when you look at pictures, you're like, look at all this stuff they did. Of course they're gonna be worth $522. I didn't do any of that. If you did, just stay quiet about it. Don't talk about it. But you're gonna just wanna put a little notation in there why you're justifying your price at $490 versus $522, okay? Or whatever that may be.
And you're gonna provide some, if you know of some?
I'm not gonna
or-
provide you this because I don't know what your house looks like today.
Okay.
I can't. I would have to go to 300 homes to give you a proper market analysis. So what I'm doing is I'm running numbers on homes that have sold, and that's why I'm teaching you today. You are gonna look at those pictures of those homes and you're gonna go, does mine have that? Is mine better than that? Is mine worse than that? Do I use this to my advantage here? If yours is worse than theirs, you want to tell in this box how yours is worse than theirs. What makes theirs better than yours? That's the goal here. What makes them better than me? You want everybody to be better than you. You want to be the bottom of the barrel. Does that make sense?
Yep.
Okay. So, in that box, that's what you put. Next. So, and this is where we're gonna send you a PDF of all those listings that sold that are backup for this. If there's something in there, once you go through your home and everything else, when you read the ones we send you versus your home, if there's something in there that you don't like, and you're like, I don't want this one, I'm not using that one. that one looks better than me, or that one looks worse than me, I'm not doing that, I don't wanna use that one. Just send us an email and we'll pull it out and we'll send you the rest back, okay, in a new PDF. Cause we're gonna send you a PDF version of this that you can just upload right here. So you're gonna upload it right in this spot. So, right there, you just basically, click the upload button. Go ahead. And then that PDF, if you've saved it to your computer, you just attach it, like the comps. And here's what they look like, okay? And you upload it there. And see, it just shows up. That's what you'll do. All right, next. Then, this is just your summary. Don't you press, don't
Not
you
pressing
send
that
crap.
Not pressing nothing.
I'm like, I got a lot of fighting to do, y'all. Yeah, so it just gives you can you scroll? It just takes you through the whole thing and the whole appeal of what we did here today. Before you submit it, it gives you a chance to review everything. And then you, of course, will not. You will click go back, but you will all click submit your appeal, okay? And you'll do all that before when? June 8th. Don't wait till June 8th. Do it before June 8th. Okay? Questions about this? Because this is the big part. What's that? Mm-hmm. Yes. So this will be an example of what you'll receive. Yours will have more pictures. I didn't want to like download that many pages. It's a lot of pages and we have to make sure the file's under a certain size. So that'll be really important that we don't overdo it. These are ones that I kind of used for a different scenario. These aren't my personal ones, by the way. These are other homes sold. It was a specific floor plan. So what I did was I pulled the homes and you just scroll down and you'll see all the different homes that we pulled for this particular comparable. There's the second one. And we usually will do 3 to 5 because that's a good number for you. They definitely want 3. And then here we give you, at the end, we give you a final summary report of those sales because it also states here the sales date. You see there it's 5/24 and 6/1/22. Remember I said to you, you have to add to the number. If we're doing, the further back we go, we have to add money to the value. So in this one, I picked 2 that one was from May and one was from June. So the one from June sold for $417. The one from May sold for $409. And given this theory, if it's 1.5%, which one is the better comp for you? If in May, it sold for $409, and May is not June, so you have to add 1 month of value to adjust. You have to adjust 6,000. So if you add 6,000 to that, that's less than what the ones in June really sold for. So do we even want to use June? No. This is where I'm saying we're doing that math before we send you numbers. That's what we're doing in the background. Is all of us on the team have a spreadsheet of all your addresses, 300 of you. And we are going through and running numbers and doing this reporting and then looking at this and doing the math like that for everyone to tell you which 3 are the best to use. Okay? Can you go back to the assessors thing? Online? Go to I need to sit there for a second. I want to show you guys something because what I was telling you about that, because I had already done it, I want to show you there's this page where they do the comp. They want to, I'm going to pull up this one because it's different.
If you go right into appeals, right down at the bottom before you start anything,
Mhm.
it gives you the comber.
Yeah,
So when they do this tax assessment, which, do they give you through this process the comps they used against your house?
No.
They just randomly say, okay.
this, like, when you go here, do you see where it says comper? This is what they're telling you to use. Oh, look at all these homes that's sold in your area. We've done no math for you except something that benefits us. So this is why I was telling everybody, don't do this. Because in their instructions, they say to use the comper. And what I'm telling you is we're gonna be your comper. That's our job. Isn't that why I have a license? Isn't that what I get paid for in life? Isn't that what I've done for 16 years? How about I tell you? They're appraisers. And as buyers and sellers, most people don't actually like appraisers. And I'm not saying that to be mean, I'm saying it because they either work for you or against you. But realtors are always there to work for you, to help you whatever direction that is. So if we're trying to get you lower, we're gonna get you lower. If we're trying to get you higher, we're gonna get you higher. That's our goal, okay? So that's why you want a realtor, whether it's us or anybody else, to do this for you, okay? One that understands numbers and comparables, so. Questions?
So if you go back to that sheet that you were providing with the comps, you have like a high, low, a median.
Mhm.
Are you just gonna send us
Yes.
that and it's up to us to pick which value we wanna do out of those or no?
No, the ones I'm sending you should be it. And they're gonna have extra pictures, but if one of them doesn't look good to you and you go, you know, Bryce, you sent me this one that was a complete flip and I haven't updated any, or that, was a complete disaster and I've updated everything. That is not gonna work because they're gonna look at it and be like, that's not the same house.
But I mean, are you gonna provide the value that you think we should?
I
submit?
am.
Okay.
I'm gonna give you a number. Yeah. I feel like that's my only job is give you numbers, really, to try to help you. And hopefully it does. You know, that's our hope, so. And the one thing I'm gonna ask of y'all, so funny, somebody online, this was hysterical. Somebody said, nothing in life is free. What do you get out of this? Well, guess what? Y'all are sitting here. I've got a captive audience. And I'm giving you information. I'm not gonna give every one of you a tax break. That's not happening. You know, I know that. But I'm educating you. That's my job. If you guys are more educated in the future, maybe you'll like us and think of us when you want to sell. So when people are trying to figure out what I'm getting out of it, well, let's be honest, I'm a realtor. I'm trying to get real estate out of it in the future. So, yeah, but it's still free. You know, this is our job, this is my career, it's my choice, it's what I've done for many years, and I hope that I always am giving back to my community. So that is actually my point. And those who have known me in our community specifically for a very long time already know that. So, I hope that you guys got a lot out of this, and it helped, I really do. And please, please feel free to reach out by email or text. Know that I will be inundated between now and June 8th, right? We will, as a team, be quite busy. But we're definitely dedicated to getting all the answers before that time for everybody. So that's all we're doing between now and then. I do have 2 houses to list, but other than that, this is our main focus because we want everybody to win if we can help.
Thank you.
Alright? Yeah.
So what if your house is in the neighborhood and it's in the worst condition?
Then
And so
Then you want
everybody
to say
else's
that.
comps are higher.
you want to say in your box why, but
Okay.
you want to be honest. And here's why. It's a great question. Because when you open that bag of worms, you can't unring that bell. And you're inviting them in to ask for more information. So if that's truly the case, when you see the comps, put it.
Okay.
But if you're really a stretch, like I know, let's be real here. I know John and I do not have the builder grade stuff in our home anymore. We still live in the home we built in 2008. But boy, we've probably put a lot into it too. We've redone every floor and every bathroom and everything. So
We don't have carpet, we've got carpet in the master bedroom and carpet in the upstairs bedrooms,
And it's all new.
and it's all brand new. We
So-
got LVP going throughout the main level, which is
Granite.
upgrade, and
And
we got
quartz.
granite
Like we did
quartz
the things,
countertops.
right? We
But
did
they're
the
not gonna
things.
tell anybody.
But we're not telling them that. And notice, none of the things I said in that one little blurb were cosmetic. Try to stick to structure. Meaning, does yours have a 2-car garage, theirs has a 3? Do they have a 4 and you have a 3? Do they have more square footage and you have less? Do they have a finished basement and yours isn't finished? Keep to that.
So our kids just went on there and looked at mine, and they don't, they say they have a basement, but they say it's unfinished.
It
So I
says
named it
unfinished.
Yeah, it says unfinished, but my basement's fully finished.
Do not open that can of worms.
That was my question. Is that adds 2 bedrooms and a full bath?
We'll pull comps for you as far as an unfinished,
Okay,
and that's what you'll get for that.
okay, so, shit.
Cause we don't know what your
Oh,
house looks
sound like
like,
you're
we're not
military.
going in your house, we don't know what it looks like, so.
Everybody hear that? If you have an unfinished basement, it doesn't, or a finished basement, it shows unfinished on there, you just, oops, sorry. You tell them that right before you sell your home. You don't tell them that now. That's when you sell, cause you want the highest value when you sell. That's when we say, hey, look at all we have. Right now, you're saying, I got nothing. I'm horrible. You don't want me. Okay? That's what I was trying to say.
So I have a new build, and as I've been getting homeowners insurance quotes, they update my records. Does that go to the county? Goes to LexisNexis, which goes to
They
the
can get it,
county.
but
Yeah.
I don't know if they have, like, you wanna look at what it says on the tax assessor, cause that's what they're looking at for this.
Okay.
They're looking at their site, they're not looking at, they're not, believe me, they're gonna be so inundated, they do not have time to go out looking at 500,000 homes to assess and reassess, I promise
They're
you.
gonna look here in this area as far as that one. and so
Right.
they can
It's all
show you
this,
mine,
yeah.
and
They're
it
gonna look at
shows-
my track home and.
Yep, and you brought up new build, so I wanna bring something up about that, you guys. If you live in Lorson or a community that's still building, you cannot compare your home to a new build, okay? That was built in that time. So let's say that if yours was built during January 2021, and so when you get your comps, you'll see what I mean. If yours was built between January 21 and June of 2022, I will be using builder comps for you.
Okay.
Or I will also use some others, which will hopefully bring it down a bit. But if you weren't, you cannot use those builder comps. So if you were built before then, 19 and 2018, I won't be using any builder comps, okay? Because they won't look in them, they won't. They're wanting to compare apples and apples, and they consider that apples and oranges. And how do I know that? 16 years of real estate and appraisers. I don't agree with it, but
Up there doesn't say anything about lot size, I have 1.5 acres. So
it does. Let's show, let's point where that is. See where it says area right here?
Ah,
That's how
Yeah.
big your total lot is, so I have a postage stamp with a house on
so
a
that all
postage stamp.
goes in, so when you're doing comps.
We're looking at it.
Oh, you
how
had
do
to take that into consideration.
We do, yeah, if you guys have more property, more land, we definitely take that into consideration.
But we live in like a community where it's just 17 houses, and then next to us is like cookie cutter.
Where are you?
Cumberland Green.
Okay, but you're the larger
Yeah, that's.
parcel?
What they now consider the estates.
Hmm. Oh, the first street.
Oh, nice.
Yeah, that's fun.
It's actually the first
So
year I was thinking about
looking
it.
for compatible or comparable homes around our area, I mean,
How big are your lots?
they're all kind of,
1 to 5 acres.
yeah.
So your property taxes are probably gonna be pretty spot on. I will say that, I'm sorry.
Well, that's why I was asking the question, because the only comparables would be basically
17
the other
houses.
7 houses, but the square footage on all the houses is so much different.
Usually we'll pull from a little further, which is,
That's why I was asking you about community-wise, because I think when I got appraised,
Yeah.
they, again, I think what somebody said was they only went off of what, money I needed to borrow. So they didn't bother doing a
Yes.
full appraisal, they were just like, and they ended up having to get a waiver to go like 2.6 miles away or something like that.
Yes.
Off the top of my head.
and we will, I'll also look before I send you yours, cause now I know what area you're in, I'll figure that out real quick. What I'll look at are some of the, areas a little further out that are a little older, cause yours is so new.
2009.
I think there are some up the way a little bit, like Peaceful Valley, and the areas right up, behind like REA in that area. There are some others that we'll pull some larger, like we'll want to try to compare parcel and parcel, because again, apples and apples. So you're not a normal cookie cutter, which is good, but at the same time, we have to see what are they looking at, you know? I might even email you and ask you for your number, so I can figure out how to get it under that. Cause in some scenario, when you're in a, like us, I'm even in a community where they're pretty standard homes, there was about, a certain number of floor plans, everybody's got the same floor plans. We've already run comps for everybody with these floor plans. Lorson, she's got every Lorson floor plan already run. All she has to do is shoot out the email. They're already done. Because floor plan is a floor plan is a floor plan. They're all cookie cutters. So it's just gonna be that way. So, you got it?
We got it, thank you.
Well, good. I'm glad I could help. I hope everybody got something out of it today. And you should be seeing these coming through starting like tomorrow. We're gonna spend I know my whole day is just sitting in front of the computer. Tomorrow knocking out comparables. So,